You know how Superman opens his coats and get the S? My name is Samer, and here you get Xylostar. Anyways, the Strait of Hormuz was opened officially last night at Friday, and just few minutes before we publish the weekly market updates, the Strait of Hormuz was announced closed again by IRGC, which is related to the Iranian government.
All right, everyone, here we are diving our next week outlook with technical analysis. But before that, I would like to highlight that whatever we had analyzed in the previous week almost happened as precisely as it can be, which is not really unusual to us. But starting with Nasdaq, we can see that, as we had highlighted, we expected a minimal retracement of Nasdaq to this support level, which is exactly what happened, and gave us this beautiful bullish candle as a confirmation for our entry, of course targeting our all-time highs, and that's where the market had moved. Now, from where it is now, you wouldn't want to go for a buy position, because as I always advise to you guys, and probably this is the only advice I officially give to our viewers, which is you never want to buy premium prices, right? So the price now is almost at its all-time highest. It's not a good time to just buy Nasdaq. However, we optimally want to see a retracement, which I don't think will happen immediately, perhaps not when markets opened, whatever it is, maybe midweek, maybe not this week. We'll see how things work out, but you don't want to enter when prices are at its peak. So the next target I am looking for Nasdaq is 28,000, maybe 300s, right, or 400s. So that's our first target upon Nasdaq. Then from there we might see a big retracement, going for another target, maybe by 2027, as in first quarter or maybe second quarter. So that's the range I'm anticipating. We should see Nasdaq going to possibly 32,000 as an optimal target till then. What is happening now, guys, might be historical for investments. And speaking of US indices, when they move, especially the biggest three, speaking of Nasdaq, S&P 500 and Dow Jones, most of the time they move parallelly into the same direction. And this is something we had uploaded upon, not necessarily the same topic, as an analysis on S&P 500 on our news terminal of Xylostars. If you guys don't know what that is, go to xylostar.com and then go to the market update section. Sometimes we really post some very good informations or opportunities in financial markets. We had highlighted upon the S&P 500, it was 6,800 by then, that for a short term it is optimal if you go for a bull trade targeting 7,400. The price now is about 7,120 is 30, something like that. So yeah, go check that out, the news portal. It's something that would definitely add up to whatever value you have or information you have about financials, markets, and trading in general. So that's about Nasdaq beautifully happening, as we can see here. Now, going to Euro USD, we did anticipate a retracement to that support level, which ultimately gave us that retracement with a confirmation. I'm not going to say similarly to Nasdaq, but also beautifully moved to the upside, of course targeting the next high. If you don't have a risk reward ratio, this is a beautiful resistance or supply level drone. I mean, you guys can take it. Yeah, that is our resistance, and boom, slide it there. Got a little bit below, but we get it somewhere around there. If you don't have a certain risk reward ratio trading plan, you will target support and resistance. Well, we do, and that's what you would learn if you come and learn with us. But if you don't, that would be your standard target, and target was beautifully hit on Euro USD. Speaking about the upcoming week, we already saw a retracement there to this support. So from here, because this is impulsive, we could see a filling to this FVG, possibly liquidating this support, not necessarily falling too deep. We could say something about this range. We get a confirmation from here. You ultimately want to go again on the bullish side on Euro USD, and we can see that if that goes down, okay, would make us something like this. And I'm pretty sure that a lot of those who are watching these videos are learning from what I'm sharing with you guys. many of you. How do I know that? I just do. I'm an analyst. I can see 1 + 1 = 3. Yeah, not 2. Well, it is 2. Actually, through mathematics, you could prove anything to be right or wrong. It's just hypothetical stuff. Nothing really is certain. Anyways, so make sure to drop that like button and give a good comment. Well, if it's about me, I'm not gonna necessarily appreciate it, but it would be nice of you to do. If it's about Xylostar, then yeah, it will be appreciated. Leave that decent comment in the comment section below, guys, and yeah, I hope you guys are doing well in your trading stuff. All right, so that's about EURUSD. We can anticipate a further movement in this up channel. And by the way, guys, this is a very, very decent way how I anticipate movements to happen. Or we could actually see a further deeper retracement here to this level before a movement to the upside. This is option number 2. So we'll see how that goes. Whenever you get your confirmation, go for that trade. So this is about Euro USD. Going to gold. All right, guys, so here we are looking at gold. As we had anticipated in the previous week, gold did move up and it gave us some really good entries as day trades. So right now, aside from this ascending triangle that is being drawn, we can see a rising wedge pattern, which is a bearish pattern. I'm still bullish long-term on gold, but for the upcoming week, we have multiple things to consider. Is that we have a portion or a place of that upper bracket of this rising wedge that wasn't really filled, and we have this fair value gap. So market could actually continue moving up, especially with this, as highlighted in this box, precisely the box I'm writing, bullish momentum. So this red candle here reflects a retracement due to bull trades or buying positions being closed by the end of the week. So we could see that, especially because it's at inner resistance, we could see a continuation to the upside and filling that FVG before a movement to the downside and possibly fall to this level here. Well, we have a very, very solid, strong support in this range. Yeah, you could actually put this in it. Doesn't really matter. So in that range, we get the confirmation we could go for a long, or it could also, because of the weakening bullish momentum here, we could see it retracing right now. Now, if we want to go for a long position on gold for a longer period of time, targeting that 6,000, I would optimally want to see this wedge, right, continuing and filling that FVG where we will see a strong bearish sentiment upon gold and that retracement, and then from here I can aim for a possible 2 positions, one for a shorter term and one for a longer term once we get that confirmation. Well, when I say confirmations, I could mean actually multiple stuff. Some of it is already in the back of my head. I just don't share everything with you guys because these are not financial advices. They are just analysis. So it's for learning purposes. And of course, for us, it's for money-making purposes. For you guys, it's for learning purposes. You want it also to be for money-making purposes? Then come to Xylostar. All right. Or rather, have a session set to be seated with me and discuss further details about what you could possibly learn and how am I going to make you a better financially related version of yourself. All right, so that's about gold. Going to Bitcoin. What had I told you guys? All right, I've been highlighting that $65,000 is a historical price to buy Bitcoin, and prices already started going up. Now in the previous week, it was approximately like 73, 74 something. What was it? Was it like, yeah, 11th of April, I think here. Yeah, so we got that retracement on Bitcoin. We got that retracement exactly as anticipated. Well, I did expect a further movement to the downside, but this actually lined up perfectly on a trend line and gave us a strong bullish sentiment, slightly liquidating that level. Well, you could still consider that, but especially because it's on 4 hours, that's why even if the wicks are not really long to either direction, still considered as decent liquidity grab. And yeah, boom, markets moved up. And guess where it is now? It went approximately 78 something. All right. And then we have that retracement. So I would optimally want to see a deeper retracement. Could go all the way down to this support, right? Then give us a confirmation, then continue to the upside. While shallow is a perfect word. Shallow retracements are not usually what you are optimally looking for. Well, if you want to invest in Bitcoin, then you could buy now. If you're looking for a trade, then you better look for that confirmation or a deeper retracement. Okay, that's about Bitcoin. So by this coming week, there are very, very good possibilities. It will be breaking above $80,000 per coin. All right, about Bitcoin. Also, Nifty 50, what had I analyzed in the previous week is strong momentum. We can expect the market to come to this. Come on. I'm usually better at drawing straight lines, but my hands, I'm not going to say shaky, I'm just going to say they're not performing as best as they usually do due to the sickness I was inhabited with early this week. And yes, it has taken about the whole week. But yeah, I'm almost recovered. And thank you for those who care about my well-being. All right, so we saw a sharp, not a sharp, we saw an instant retracement here and to that doji in the middle. Almost, and a continuation to the level which we had spoken about exactly about Nifty 50 due to the momentum that we saw a week before it. So we're still bullish on Nifty 50, especially now that, yeah, there is no more World War III looming around. So of course we can expect other economies, not only the Indians, in European economies doing well. Hopefully the Japanese economy also shall flourish soon, especially after the global deals that are being doing. If you guys want to know more about those little details, then go to our market updates, aka Xylostar's new news terminal, and have a look for yourself about what that is. Like SanDisk, if you guys haven't heard about that, well, I'm pretty sure almost every single person who's watching this video has heard about SanDisk at some point in their life, if not use one of their products, like the hard drives we use. Well, from a year till now, SanDisk had improved or appreciated in stock price more than 2,740%, which is, yeah, it was the Nvidia for 2025. Like Nvidia it was for 2024. And SanDisk was the Nvidia for 2025. And guess what? If you come to Xylostar, I might as well tell you about what is Nvidia for 2026 or maybe 2027. Let's see how that works out. But a stock that has huge potential to skyrocket. So if you want to become rich, let's meet up. Yeah, that'll be about it for my side. Now I'm shifting the microphone to Mr. Median in London. Hope you're doing better, mate.
Brilliant. Thank you, Samuel, for sharing your insightful analysis on the technical side. Here is Amir Hamidian, Master of Finance and Investment in UK, and also Financial Market Analyst at Xylostar. Last week, Donald Trump's statement brought back the hope to the financial markets as the stock prices pushed higher. Let's have a look. Greeting everyone, welcome back to the weekly market update hosted by Xylostar. Last week, as we talked about it, financial markets moved higher after Donald Trump's statements regarding the ceasefire between Iran and the US. He hinted at possible negotiations and less aggressive policies, which boosted the investor confidence and also market participants. This helped the stocks rise as traders reacted to a more stable outlook for the future. From the economic indicator, last week we got also the latest updates regarding the Producers Price Index in the United States. US Producer Price Index increased again in March, marking the strongest yearly rise in over a year. This indicates that inflation pressures are still building. The increase was mainly due to a sharp rise in energy costs, particularly fuels. While goods prices rose and services remained relatively stable, core inflation showed some moderation, which was absolutely good news for the Federal Reserve. However, overall trends suggest that underlying price pressures are still strong, which keeps the outlook on rate cuts cautious. The next one is the UK GDP on monthly basis. UK growth showed a modest but improving trend, with GDP expanding 0.5% over the latest 3 months period, supported mainly by services and production. The economy's momentum was driven by a steady services activity and a stronger industrial output, while construction remained a clear drag despite a sign of short-term recovery. New York manufacturing picked up in April, with stronger orders, shipments, and hiring supporting a rebound in activity. However, input cost pressures rose again and supply issues worsened, keeping inflation concerns alive. Optimism remains, but confidence and investment plans have softened, signaling a caution ahead. From Australia, the labour market remained broadly stable in March, with the unemployment rate holding at 4.3% and overall participation largely unchanged. Employment edged higher, driven by a rise in full-time jobs, while part-time roles declined, pointing to a slight improvement in job quality. The next is about the car patterns in the United States, as TSMC, one of the biggest chip makers in the world, released its earnings for the first quarter of 2026. TSMC kicked off earnings with a strong beat, driven by a massive demand for AI chips, reinforcing the ongoing tech rally. Results showed a solid growth and higher guidance, confirming that AI spending remains a key driver for markets this quarter. Finally, I can say chip and tech earnings this week are setting a positive tone for the financial markets. Let's have a look to the upcoming week. Next week, financial market participants and also traders are going to be surrounded by different economic indicators and also events. As initially at the beginning of the week on 20th of April, on Monday, we are going to receive CPI numbers for the Canadian dollar and New Zealand dollar. Later on 21st, we are going to receive the retail sales number and also testify from the new chairman of the Federal Reserve, Bosch, on 21st of April. And later on 22nd, which is Wednesday, CPI numbers for the Great British Pound. And on Thursday, we are going to receive the PMI numbers for the different regions in the European Union for both manufacturing and services, such as flash manufacturing PMI for the Germany, and also later services PMI for the European Union. Worth to be mentioned, for the UK, we will also have two indicators such as manufacturing PMI and services PMI for both our flash numbers, which means the first release. And eventually on Friday, we are going to receive the retail sales number on the monthly basis for the Great British Pound. Before cutting this session, I just want to add one more bottom line. As we talked about it, the Donald Trump statements regarding the Iran and the US will increase the risk appetite of the financial markets in the upcoming weeks. Stay tuned with Xylostar. See you next week.